Hey Desert Life family, it's so good to see you guys. So today we are going to talk about the Phoenix market. What is going on in the Phoenix market? Is there a bubble that's getting ready to pop? And I know nationwide we're seeing some big changes in the housing market. However, it's always good to look at a specific market because each market is different. You have some markets that are just still hot. There's still a selling, or I should say buying frenzy, and homes are still being sold way over asking price, and there's still a lot of competition. I think nationwide on average there is a lot of competition, or the housing market is competitive, I should say, in general. However, it's always good, or you should look at a specific market because, like I said earlier, each market is different. You have some markets that are doing well. You have some markets that are just starting to cool off and really balance out. So we're going to look at some data to see what is happening with or in the Phoenix market. Now, housing statistics have flipped from just 3 to 6 months ago. Inventory is up, prices are falling. We're seeing some price reductions here in the Phoenix market. And if you look at it from one lens, then you may think, the housing market is going to crash. However, I'm all about the data, right? And so we need to look at the data to see what is really going on in the Phoenix market and how healthy the Phoenix market is. Now, I must say this, that the housing market typically takes some time to respond to the economy. It's not like the stock market where Monday through Friday you can see stocks going up and down and they respond to an announcement by the Feds or any other big announcement that's going to affect the economy. So we can see that the stock market change on a daily basis. The housing market is not like that. It takes some time for the housing market to respond to the economy. So we do know that it has changed just from, like I said, 3 to 6 months ago. So although things are going in the opposite direction right now, like I said, just from earlier this year, the housing market really has just cooled down for now. This is what we're seeing. So we're going to look at some data to support that. All of the data that I'm sharing with you today is just for Maricopa County, and it's just for single family homes that have been sold as a normal sale. So it does not include any homes that were sold as maybe a short sale foreclosure. They're normal sales, single family homes. So all the data does fall in that category. Okay, so let's take a look at this. DOM stands for days on market. This tells us how long on average is a listing on the market. As of August of this year, it was 38.84. We're going to round that to 39. So 39 days on the market on average for a listing. When we look back at 2019, 3 years ago, pre-COVID, that number was 59.23. So the days on market in 2019 was 59. So 59 days, excuse me. So we have seen the days on market increase over the past few months, but it's not as high as it was just a few years ago. The next piece of data I want to share with you guys is the days of inventory. Now, the days of inventory tells us how long will it take for us to run out of inventory if no new listings were added to the market. As of August, this was 67, I'm rounding it, 67 days of inventory. And then for August of 2019, it was 47.9, or around that to 48 days. Now, we do have more days on the market, more days of inventory right now than we did in 2019. However, we also have to look at another piece of information to help us make sense of that. So active listings, we have to compare the active listings as well. So when we look at the active listings for 2022, as of August of this year, we had 12,401 active listings. In 2019, we had 8,675. So we have more active listings now than we did in 2019. So it would make sense that our days of inventory is more than it was in 2019. And then the last piece of information I want to share with you, actually, there's 2 more pieces of data I want to share with you. Our median sales price. And again, median is the middle number, okay? So a median sales price as of August of this year was $500,000, and in August of 2019, it was $309,900. And I would expect for this number to be more than it was years prior, because you have to consider appreciation. And then the last piece of information is our contract ratio, which really tells us how healthy, how balanced the market is. As of September 1st of this year, the contract ratio was 43. September 1st in 2019, it was 80.9. Now the contract ratio tells us, out of all of our active listings, how many of those are under contract. So when this number is between 30 and 60, that is really a healthy, balanced market. If it's over 60, then it's more of a seller's market, okay? So in 2019, it was more of a seller's market. But this is just saying, we look at all this data and it's just saying, okay, the market is really just cooling off. Now, the other thing that we have to consider, right, because I really want to consider as much data and as much information as possible. We do know that this past week or two that there was a big meeting at Jackson Hole at the Fed's annual retreat, and the Feds, they have this target rate for inflation, or target number for inflation. So this is what they said, just in case you did not hear this, and I quote, "They would not blink in their fight, cautioning that their efforts may cause pain for U.S. households and businesses." So the Feds are really adamant about keeping interest rates high until inflation cools. So with inflation being if it continues on the way that it is, that means the Feds are going to continue to raise rates until they can get inflation under control. When you see an increase of the rates, that means mortgage rates are going to go up, and that's going to decrease home affordability, thus creating less buyers on the market. The other piece of data that we need to consider is the job market. Now, I've read somewhere that there's a high chance that a lot of people may lose their jobs. I mean, a lot of companies have been doing major layoffs over the past few months, and it may continue on. So if we see a huge layoff with companies, then that's going to affect people, unfortunately, being able to afford their bills, and that includes their mortgage payment. So we may see an increase of inventory. Who knows? I don't know, but we do have to consider all of that. Again, keeping in mind that it does take time for the housing market to respond to what's going on in the economy. So the key is to look to see what the Feds are doing with the interest rate, and also looking at the job market data. Let's take a look at supply and demand. So take a look at this chart. So right now, our supply and demand, our demand is 81, supply is 65.6, and this is as of August 1st. So demand is higher than supply, but it's not nearly as much as it has been over the past few years. So I know there's a lot of colors on this chart right now, but if let's take it piece by piece, okay? So the green shows a balanced market. When we see the supply and the demand lines basically overlapping each other, that tells us it's a balanced market. So that's what we see in the green. And let me point out real quick that the red line represents demand, the blue line represents supply. The cyan color, or blue color, is when the market crashed back in 2006, 2007, those years. So you see we had way more supply than we did demand, okay? And house prices fell during those years. Now let's fast forward to the red arrow, which is where we are right now. You see supply and demand, they are headed towards each other. Now, if they overlap over the next few months, then we'll see that it's going to be a balanced market. However, when we see that flipped, when we see the blue line, the supply line, over the red line, that means we have more supply and demand, and that's going to affect housing prices. So this is another piece of data that we have to keep track of, because it's going to tell us what's really happening in the market. Again, keeping in mind that The housing market takes time. It takes time for the housing market to respond. And I also want to share with you the Crawford Market Index. Now, the Crawford Market Index is another piece of data that tells us how balanced the market is. I do realize that we looked at the contract ratio, but this is another piece that we can use as well. Now, when this number is above 100, it is a seller's market. When it's below 100, it's a buyer's market. And when it's around 100, it's a balanced market. So as of September 2nd, the Crawford Market Index is 106. I'm rounding it, 106. Okay, so balanced market, which is all the data that we've looked at so far is supporting a balanced market. Now, when we look at this number last year, what this number was last year, this time last year, it was 346.7. And we know how it was last year. It was a buying frenzy. So it was a seller's market just last year. And so the Crawford Market Index supports that. And then some more information that I want to share with you just in case you are considering selling. We've had some price changes. I know that's been a big talk in the market, I should say, of how many homes are reducing their price, okay? And I want to share that with you again, just in case you're thinking about putting your house on the market, you need to know what you're facing, okay? So the average, I should say the median price change amount as of August 27th was $10,000. Now, this is the median, which is the middle number. I personally have seen numbers higher than 10,000, but this is the median price change amount. And the number of listings that had the change amount was 2,515. Now, that may seem like a lot, but when you factor in out of how many active listings, which was 12,401, that's really about 20% of the listings that have done a price reduction. And then last but not least, our median sales price, monthly median sales price as of September 1st, it was 500,000. Okay. Now in July, the monthly median sales price was 510,000. And then in June, it was 530,000. So we are actually seeing the monthly median sales price go down. This is all just going towards a cool down or balanced market. But like I said, we have to just keep our eyes on what the feds are doing with the interest rate and also what the job market is going to look like in the upcoming months. So there are two questions remaining. Number one, should you buy? Only if you can afford it. Now, I recommend only buying if you're comfortable, if your financial situation allows for it, and at the end of the day, you have to make the best decision for you. It is more expensive to buy a home now due to rising interest rates, and if the feds continue to increase the rates, which there is a high possibility they will, we are going to definitely see that the mortgage rates are going to go up along with that. So just make sure that you budget and make sure that you just plan it out. If you are approved, let's say for example pre-approved for 500,000, don't max out your budget, okay? So just be very strategic on how you go about buying a home. The other question is, should you sell? Now, homeowners sell for a variety of reasons. Some sell because they have to due to a life-changing event, or some need to sell because they want to, maybe because they are empty nesters and they want to downsize, or maybe their family is expanding and they want to increase their living space. If you decide to sell, or if you're thinking about selling within the next 3 to 6 months, just be prepared, because the market is a lot different today than it was a few years ago. So you may see less buyers. Demand is definitely down. So you may see less buyers coming through. You may see less buyers interested, or you may see less offers on the table. You also may see that your house may be on the market a little bit longer than expected. You'll probably see less offers as well. Now, if you decide to sell, or if you're thinking about selling, then I recommend putting in or offering incentives to attract more buyers. You also want to make sure that your house is ready to show. So you want to deep clean, you want to depersonalize it, and do any of the necessary repairs to get it ready for the market. Hey, if you ever have any questions, please feel free to drop a comment below, or you can reach out to me personally and I'll be happy to chat with you. I'm Renee the Realtor. As always, thanks for tuning in, and we'll see you next time.